My comrade, if you're anything like me, you'll sometimes experience difficulties whenever you're doing the trade. You'll sometimes find yourself get into a position that you cannot hold. So then, therefore, you get nervous, you get a little bit scared. You start to maybe think about you're going to leave the trade. But as a result, you panic and you close the trade early. I used to be just like you, my friend. I used to have fear, emotion, insecurity whenever I was doing the trade, but I will show you in this video today how I learned to relax and let the trade play out. You may think to yourself, it is all about the risk management, being confident in yourself, thinking to yourself you can do this. But it simply just comes down to the fact that you have no fucking clue what will happen, my friend. You will enter a trade, the price will move up or the price will move down, you will be right or wrong, and then the day continues on, and then you go and have another sip of vodka, and then you wake up in the next morning and you try to do it again to not lose your whole family fortune. Now, now I can't do this accent the whole call, because with this video I would really hurt my throat trying to do that. So instead I'm going to shoot straight with you. I've been trading for close to 8 years now. I've been doing this for so long that it's just like second nature to me. I routinely experience what most people call fear, insecurity, lack of confidence in their trading. But I was able to figure this out, and I'm going to show you how I did it. So it all boils down to this, essentially. How to stay more relaxed and just let your damn trade play out, okay? It comes down to the fact of knowing that objectively you have no clue what's going to happen. You're going to get into a trade, price is going to go up or down, and ultimately what happens on a trade-by-trade basis doesn't even really matter, because what matters more is whether or not you can control risk for the long term. And if you can, in fact, control risk long term and make a little bit more money than you lose when you're right versus when you're wrong, then you're statistically very likely to be profitable over an extended period of time. Now, don't listen to anything I say. I'm not a financial advisor. You do whatever the hell you want to do. Trading's risky and most people lose money. I'm just going to show you what works for me. And I'm going to show you with an example of 2 trades I took this morning. I actually called these out for free in my free Telegram channel. It's Mission FX Trading. First link in the description of this video. It's just a free channel I've been running for 5 years, showing exactly how I trade, literally just calling out trades live and sharing all my setups and analysis and sometimes some stupid humor in here. It's a fun group you can join at the first link in the description. But we took an EU trade. So I called this trade out this morning, and I bought here at the support zone. So a lot of people, what will happen is as soon as they get into trades, they get in and they start to panic the moment it goes against them. So whenever you get into a trade, you typically have everything planned out for thinking, I'm going to get in here at the support, then it might bounce and go up. All I use is support resistance. I don't do all this complicated bullshit. I've been doing this for almost 8 years. I've just been using support resistance. That's what's worked for me in terms of profitability. There's literally nothing else I do. Support resistance and basic price action. Anybody who tells you need all this bullshit on your chart, I don't know. That can work too, but I just figured this is going to go up or down. Might as well just keep it simple. Works for me. So if you think price is going to move from the support zone and bounce upwards, you may have a trade structured something like this, where you get in, you have a stop loss below the zone, and then a target up here. Now, some of you will opt to hold it to the profit target of the stop loss. There's nothing wrong with that. Some of you will opt to get out of the trade early in loss or in profit, and there's nothing wrong with that. And some of you will just not even do this. You'll have no fucking clue. You won't even put a stop loss in. You won't even calculate your position size. You have no clue how much you're risking. You're just completely clueless and lost. If that's the case, go to babypips.com, learn all the basics of Forex trading, figure out at least how to control risk, because that's really the only thing that matters long term. So, what about the rest of us who plan out of our trade and we're just waiting to see what happens, right? You can get out of your trade early, in profit or in loss, if there is a rational, logical, evidence-based, justified reason to do so, whether it's based on your intuition or whether it's based on some mechanical black and white things and rules and criteria that you've set in place that tell you, hey, if this happens, you should probably get out of the trade early. Otherwise, you're fair game to just simply close the trade based on your emotions, based on your P&L, based on the fact that you're scared shitless that it's going to go to your profit target, or it's in profit and you're afraid you're going to give back the profits. Look, I know what this shit's like. I've dealt with this like my whole trading career, and to this day, I still deal with it. I just deal with it in a more profitable way than I did whenever I first got into trading, before I even really understood anything about keeping a risk structure and keeping things simple, anything like that. So there are a few reasons to close your trade early. The first reason would be if you no longer believe that the outcome that you originally thought was going to play out is in fact going to play out. If you are no longer convinced that the trade is going to work, it's perfectly fine in my opinion to close the trade early. Where you run into a caveat here is you have to distinguish between the emotional part of your brain that is making you scared shitless that you're going to lose the trade, and the rational side of your brain, which is telling you, hey man, it's still at the support zone, it hasn't broken it, it's still bouncing, you're just trying to exit this trade early because you're a complete pussy. And you have to reconcile that in your brain, and you have to ask yourself, damn, is it really my emotions or is it logic and rationale? And sometimes your brain is really good at conflating the two to try to convince you that there's a logical reason to close the trade early when there in fact is not. So how do you get good at this? One simple word: experience. Applied experience gives you the set of skills that you need to then allow you to have intuition for what the best decision is to do in the given moment and the context and the market environment. And then with that intuition gives you wisdom. It gives you the ability to say like, hey, this trade's probably better off being closed right now. This trade's probably better off being stayed in right now. Or maybe I should use half my position sizing because I think this is going to work out, but I don't want to risk my full sizing on it. So maybe if you risk $1,000, maybe risk 500 instead. Things like that. You learn that through experience. Now I'm going to show you how I managed some trades this morning. So I got into a trade here on Euro USD. I'll actually show you where I legit just called this out. We'll go here, mix analysis. And I'll show you. So this was the EU trade that I called out. So Euro USD right here. So I'm closing Euro USD here. Here we go. All right, finally. Buying Euro USD here at 7 lots. This is a risky trade due to the bearish candle, volume, momentum, but a reasonably nice zone in my opinion. I'm only starting this with $1,000 risk. We'll add if price begins to bounce here with the max allocated risk of 10K for all additional entries. So my max risk on this was 10K, but I started off with a $1,000 risk since it was like heavy momentum into the zone. And what was I doing? I was just buying at support. I don't know how these people do all this complicated trading stuff. I buy at support and sell at resistance. It's worked for me for quite some time. So whenever I bought here at support, what ended up happening, this is me where I bought there. This is me wherever it went up here. Invalidation was like maybe like what, 30 pips or so. That was a $1,000 risk. All right, so it bounced, and whenever it bounced, I ended up getting out of here. Now, a couple things happened from the moment I entered this trade to the moment that I closed it. For one, whenever I entered this trade, price had got down into here. Price went into profit, but then it started going sideways. Some people will look at this and start freaking out, and they'll find every reason under the sun to say that, okay, if it starts going sideways and it looks like it can make a lower low and start going back down here, maybe I should exit the trade early. Maybe I should just get out. Maybe it's not going to work. And stuff like that causes you to second guess your original analysis, and it's not very profitable of a thing to do long term, in my very humble opinion. Not financial advice. I have no clue what I'm doing myself, even after 8 years. So you just don't go, you do whatever the hell you want to do. But I'm just saying, that doesn't really make a lot of sense for me. What makes sense for me personally is to start with a very simple criteria. If it starts to bounce at the zone, stay in the trade. If it breaks the zone, exit the trade. Fair enough, right? Plain and simple. So it all begins with drawing out whatever you think the outcomes are likely to be, whether you think it's going to bounce at support or bounce at resistance, or you think it's going to bounce at the moving average for the bullish Wagyu beef candlestick institutional manipulation candlestick strategy with the bearish order flow distribution fair value gap smart money concept liquidity invalidation candle imbalance approach. I don't know. You do whatever the fuck you want. I'm just saying, like, if I buy at support and I sell at resistance, that works pretty fine. It's all about managing risk. That's all it comes down to. So I just keep things simple and control risk. I've been fine for years. So whenever you get into a trade, it can be very tempting to start wanting to exit early. However, you may be exiting early before your trade idea has actually become invalidated. So the best thing you can do is collect experience, seeing the same stuff happen over and over and over. And as you collect all this experience of watching the same things happen over and over and over, this gives you that little feeling like, oh, I've seen this over and over. I've bought at a support zone, but price continues to make lower highs into the support. It continues to go sideways. It's failing to bounce. It might just be better if I get out of this trade because it looks like it might break through the support level and go hit my stop loss. Therefore, it'd be probably a better idea to close right now. You're not going to be right every single time, but you will be right enough to the point where it will mean that you make a little bit more on your winners versus what you lose on your losers, given the right context and nuance. Let's look at a second trade I took today, how I stayed patient in getting in this trade. So price came down into this zone. I bought, my first entry was up in here. My second entry was down here. And I think I had 4 entries in total. So if we go and we look, there were these 4 entries. Here, we'll go all the way down here. This was it. This was my trading day today. So $2,000 today in FX. I call all my trades live, so you can see it all right here. So here I had 4 entries on Euro AUD. And let's see. So yeah, they were all right here. So you can see I bought at support. Now, how did I stay patient throughout this whole duration of this time period? First things first, I have no clue what's going to happen. It's going to go up or down, so I don't attach myself to the outcome. That's where it all begins, right? I don't care what happens. It's a candlestick on a chart, and it is going to go up or down. All the reasons you impose as to why you think that's going to happen does not even fucking matter. It is all arbitrary. It's all random. Nobody can predict it. All you can do is just control risk. So here's how I control risk. I said I'm going to buy here at the support. If it goes a little bit deeper into the support and I can get a little bit better of an entry, then I'm going to add to my position up to my max allocated risk, which for this was $10,000. That was my max allocated risk for this trade. Then I can give myself a little bit of wiggle room by not getting out of the trade and panicking if it just goes to test deeper into the support zone, but instead getting a little bit better entries whilst still having an invalidation, stop loss area essentially, just underneath the zone, so that in case price were to in fact break this zone here and go down here, I could just close all the trades at a loss. Take like a 3K hit, maybe 2 or 3K, maybe 4K, it depends on how far it went. I had a bigger invalidation, so that means I'd be actually risking even less if I just closed it whenever it broke the zone, instead of holding it all the way to where my original stop loss area was. However, if it bounces up, well, then it's great, because you make profits and you didn't invalidate your trading idea. Would it be a good idea to close a trade based off support and resistance while it's still at the support zone? Unless price appears to have already tried to bounce there and is then making lower highs and is just refusing to bounce. It's had 5 opportunities to bounce and it just continues to go sideways. In that context, yeah, it might be a better idea to get out of the trade early, because it is obvious that the validation of the price action for your trading idea is simply not there. Because what would happen if you were right? Well, you know what? You're a genius if you said it would just go up. If you enter a buy at a support zone and price goes up, sweet, bro. That is awesome. That validates your trading idea. What invalidates your trading idea is if price begins to go sideways, or if it starts trying to go up but making lower highs, and has a deep candle closure into the zone, a bunch of things where you put them all together and you're like, I don't know, this doesn't really look like it's going to go work out anymore. All of that stuff adds in and factors into the analysis. This is a good cigar. Wow. This is a Baccarat, Connecticut. It's one of my favorites. Very simple cigar. Very creamy. Very pillowy smoke. Hints of nutmeg and spice. Just like my trading journey. Hints of spice. Sometimes it's very flat and mild. Sometimes they get real spicy on my crazy win streaks. Life is like a cigar, right? You got your cigar, you got trading, you got your life. And you even got Russian accents sometimes at the beginning of YouTube videos of crazy people like me. So in this case, I decided to hold this trade, and price did in fact end up bouncing. And I ended up making a profit on this trade. So in total, there were these right here where Euro AUD spiked up. I closed my trades up here at this high whenever it pushed up here to this next area, and then ended up coming back, and now it has since gone sideways. I'm not trying to be the hero when I trade. I don't like trying to hold for the next 7,000 pip move. I'm just the dude that says, you know what? I think it might move from here to here. Let me just catch this little move, and let me avoid all the bullshit of staying in trades for like 6 months at a time. I don't know. I just don't want to be that guy holding a trade. I think it's, for me, at least, I just want to be the dude that gets the small, relatively predictable moves, whether price is in an uptrend and it pulls back and trying to get a little bounce, whether price moves higher, goes to a resistance zone, and me getting a sell and it has a little bounce away. I'm just trying to get in and out with a little quick move, control risk, make everything contextualized, and come outside and smoke my cigar after having my afternoon lunch. All right, I'm no one special. I'm just a dude that has a reasonable degree of common sense and controls risk. And because of that, that's the only reason I'm profitable. I keep things really simple and control risk. I don't consider myself to be that smart of a person. And as you develop these skill sets, some things you learn along the way are the fact that when you get into a trade, if your analysis is still perfectly valid, you simply have to be patient and accept the outcomes and let the trade play out. You got to relax. You learn this through experience. You just have to do it over and over and over again. I recommend you doing this in demo whenever you're first getting started. That way you can start dragging yourself through that and kind of get a feel for what the ups and downs of trading are like. So you get all the experience. You see all the ups and downs. And then with that experience comes that beloved intuition. You walk out into your living room. You're a confident person. And you look at your chart. And you start just cursing at your chart. You just start yelling and screaming. I'm just kidding. You go to your chart, you sit down, you do your analysis, and then you accept what the outcomes are. It's either going to go up or it's going to go down. All you can do is control risk. Support and resistance in any technical analysis at all has zero bearing whatsoever on speculating on where price will go. It is completely useless as a way of predicting price direction. In my opinion, it's a loser's game trying to predict price direction. Better off drawing random support resistance zones on the chart wherever the hell you think they are. I draw them where I think they're the most obvious because other people might buy and sell there, this and that. But roughly speaking, it's only going to work 50% of the time. What the edge comes in from your risk management. So it's such that when you get into a trade, if your analysis remains valid, you hold your trade. But the moment your analysis becomes invalidated, meaning you think that the final outcome is less than a 50% chance of winning because of what price has done. Because, for example, price gets to a support level and fails to start bouncing, and instead it just goes sideways and starts ranging. That's a good sign that, bro, your trade's probably not right. Everyone else would have bought whenever it got there with you, and it would have had a nice bounce. You would have hit your profit target. You would have been able to quickly come outside and have your first cigar of the day at like 8 a.m. before the stock market opens. because you finished your trade so quickly because it worked. When you find yourself sitting in a trade for a few hours, when you were just going for a little bounce off of a support resistance zone, or even worst case scenario, you're sitting in a trade for like 2 weeks on some stupid pair like CAD CHF, pair that just goes sideways for like years. If you find yourself sitting in a trade for so long, clinging, hoping, like, no, bro, it's going to bounce here at resistance, bro. Well, it's already tried to bounce like 10 times, and it's failed to have a big move down. What do you think's going to happen? Be real with yourself. If you think price is going to break a zone, you've entered a trade, it's okay to get out of that trade early if you think it's not going to work for logical, rational reasons. If you are closing based on fear and emotion and greed and all this bullshit that everyone else yells at you online, like, don't be greedy, you'll never go broke taking profits, right? People say all this bullshit. All it simply comes down to is the fact that you need to control risk, keep things relatively simple. Just keep things simple and control risk. If you think it's going to work out, stay in the trade. If you logically, rationally, undisputed, with objective empirical evidence that you can observe there on the chart, adding in a little bit of your intuition, if all those things come together and dictate that you feel like, okay, this trade's no longer likely to work out, I'm not closing early and taking a small profit or a small loss or a break even because I'm scared, but I'm closing early and taking a small profit or a small loss or a break even because I don't believe the final outcome is that likely to occur anymore. It's okay to close a trade early or stay in a trade, provided it is the right context. And the context is because it has to be based on the right reason. The right reason for me is never because of emotions. It's never because of fear, because, oh my God, I'm going to lose $50 on this, so let me just close it right here at $20. But then as soon as you're out of the trade, you look at the chart and you're like, well, I still think that's going up. So why did I close the trade early? Or maybe you used too heavy of a position size and then it started going against you and you freaked out and just closed, even though you thought the outcome could still play out, but you were scared because you risked too much, and then it just doesn't make sense. What the fuck's the matter with you? Plan everything out. Get the trade all structured. Get your risk all structured out. Like, here's where my stop is. Here's my target. Here's the lot size. That means it's going to be no more than XYZ amount of risk, however much risk you decide. $100, $500, $1,000. Use a position size calculator tool, and then plan your trade out, and then let the trade play out, provided it does not get invalidated. If you get into a trade, you believe it's no longer likely to work out, feel free to close the trade early. Going through all this experience and seeing the same shit happen over and over again has made me realize how hilariously useless most of my emotions are. I have mastered, more or less, my emotions in trading. 99% of the time I can make a decision that's based on logic and rationale and not from fear and FOMO and greed and like freaking the fuck out and having a panic attack because my trade started to go a little bit against me, but it still might be bouncing at the ZA and all this shit. You learn it with experience. Take the time. Use a demo account. Track your trades. Get some data. Get some experience under your belt. It gets you to start understanding and realizing which trades are more likely to work out and which trades are more likely to not work out, so that you can then either add to your winning trades and have nice big winners when you have them, and then get out of your losing trades a little bit earlier, so that way in case you do in fact have losses, or it's just no longer as likely to occur, you could just abandon those trades, scratch them out at a small loss, small profit, or break even. You can be on your merry way. I have mastered my emotions to a degree because mainly of the fact that I keep things simple and control risk. And I think if you do the same thing, not financial advice, and I don't know you and I can't guarantee you anything, but I think it might help if you keep things simple and control risk. First link in the description is my Telegram channel. It's free. You can go in there. You can watch me trade and yell every single day. And I might even share a few cigars I'm smoking in there as well. You know, been running this Telegram channel for like 5 years. It's been a ton of fun. I'm going to see you in the next video. Maybe if you come and watch another video. And if not, that's cool too. I'll be here. Cheers, everyone. See ya.